Hey guys, welcome back. This is Neo. How is everybody doing? I wish everybody is doing well. I just made my cup of coffee and I'm so dehydrated. Been talking on the phone with two, two of my friends. Um, talking about SoFi Technologies, Robinhood, all the current investment, and going forward, how we should be positioning ourselves. Okay, first thing first. Today, our video is about the Q3, third quarter of SoFi Technologies for the year of 2025. Wonderful news, continues to grow, top and bottom lines, continue to see excellent growth rate for all the segments of the business, which we will talk about soon. First thing, adjusted revenue top line growth 950 million, a $38% year over year growth. And then GAAP, net income was $139 million, a significant increase from the 61 million net income just 1 year ago quarter, Q3 24. So Q3 25 we have net income 139 million. Oh my god, this is crazy. This is so crazy. More than 100%, 110% plus growth year over year. Adjusted earnings per share came out to be 11 cents EPS, which just matches what I expected, and we will go over that. More than double the 5 cents per share in a year ago Q3 2024, which is amazing. So guys, let's continue to dive in. I have another screen just showing me and other market news. Let's dive right in. Thank you guys. All right, guys. Let's first take a look at the SoFi Q3, the EPS. Okay, I have a chart. Give me 1 second. All right, guys. Here we are looking at the table for the EPS quarter over quarter, and you can see to the right side, the second last one is 8 cents per share, which was the Q2 result. As you remember, there was a dilution by the management to raise additional capital right after the Q2 result, and with that dilution and secondary offering of shares, that means there will be more outstanding shares on the public market. So in order to maintain this momentum, this upward momentum of EPS growth, the management really has to be very sure that the raised capital would be put into very good use, which further future growth, which is the case here we see as the result of the Q3, because the EPS continue to accelerate. Actually, if you look at the slope of the line between Q2 and Q3 is actually sharper than between Q1 and Q2. So it is actually accelerating. Per EPS, earning per share actually shot up from Q2's 8 cents to now 11 cents for Q3, which is very, very strong growth. It indicates that the management decision was correct. The additional raised capital can be used to buy down loan cost or to buy some good company or acquire some good company. So we will see. This time, I don't really foresee another capital raise, which we will talk about it when we look at the financial statements or the company statements later in this video. And now, because of this EPS beat and continued accelerated growth of EPS, I even trust the management even much more, especially CEO Anthony Noto's vision, his energy, his focus, his leadership, Alright guys, we are back to the SoFi webpage. Oh, payless student debt and got big ambitions. Of course we do. New IPO offerings is available. Oh man, I have 2 IPO investments via the SoFi app already. Crypto coming back. We are paying off one winner's mortgage up to $500,000. Oh, perfect. Nice. I would love to learn more about that. Okay, let's dive into SoFi Q3 features presentation. This is the investor relation webpage of SoFi. Let's dive right in. Okay, let's go to the first one. SoFi investor presentation Q3 2025, October 25. And oh wow, durable growth, strong returns, record adjusted net revenue of 950 millions, 950 millions, 38% year-over-year growth rate. How does it compare with my projection? Let's take a look. Let's go back to right here. Let's see. I believe I projected somewhere similar. Oh, 945. Is it right? Oh no, this is the membership. It should be down there. Let's see, it should be down here somewhere. Um, I remember I have it somewhere. Interesting. Is it my most up-to-date one? Revenue. Interesting. Yeah, I remember I have it somewhere. Oh, total revenue. This is 915 estimated. 915, and what does it say? So my was remember 915 estimated revenue growth. And what does it say here? 950. So I was expecting 915. It is 950. 38% year-over-year growth, which is great. How many companies can we find that grow top line 30% year-over-year? Record adjusted EBITDA, earning before interest, tax, depreciation and amortizations of 277 million, 29% adjusted EBITDA margins, which is wonderful. Why? Because you have the growth at 38, you have the EBITDA at 39% margin, 29 plus 38 is 67%. Do you know that for a software company, most venture capital firms would not love to invest in any of those companies if the number is not higher than 40. And SoFi has 67, not 40, not 50, not 60. It's 67. The rule of 40 has been broken by SoFi consistently, quarter over quarter, since the last year. Actually, since 2023. Now, for a software company, a fast grow one with software as a service SaaS, they expect, those venture capital firms expect them to have at least 40%. When the year-over-year growth plus EBITDA margin combined is at least 40, but SoFi is 67. So SoFi is a fintech, it's not just a bank. SoFi is a technology, AI, big data driven company. A lot of analysts have at least this very first part wrong. Okay, a lot of analysts, big name analysts, have this first part wrong about SoFi. So GAAP, GAAP accounting principle. Net income was 139 million, 14% GAAP net income margin, which is exceptional, which is great, as SoFi is still ramping up and still giving out a lot of perks for new members, for people to join SoFi. So otherwise, you will see this 20%, I would bet. But they are still spending a lot to acquire new members as of now. Growth is more important, growth for membership, and then the increased membership means future profitability will be much higher. Let me see, do I have it here? Well, to save you guys some time, maybe I should not look for it, just continue with the earning report here. Yeah, I have net income somewhere, but it is higher than my projection because the revenue is higher than my projection already. Record adjusted EPS of 11 cents. Wow, this is huge. On average, most analysts were expecting 6 cents to 8 cents, and we have 11 cents. And then let's go back to that one. I really need to go back to because I really want to let you guys see how close my estimate was. See, 11 cents, right? So this is my estimate, 11 cents EPS, earning per share. So actually I was spot on this one. And let's go back. 11 cents fee-based revenue. Wow, 50% year-over-year growth, which is great. Financial service. Let's back up a little bit. Fee-based, right? So these are fee-based. SoFi doesn't really have much risk in this business type because they help other financial institutions to underwrite loans, let's say, and then they get a fee from those financial institutions. And then the financial service and tech platform revenue contribute to 534 millions of adjusted net revenue, 57% year-over-year growth, which is great. Record loan originations. Remember what I said in my last video? A lot of the analysts also have this one wrong. They expect SoFi to have worse and worse loan origination numbers because they are saying, oh, rates are going down, SoFi will be earning less. But actually, because rates are going down, more people want to have access to loan and finance personal growth, finance home remodeling, finance their small businesses, to get a new car. So more people apply for loan, then loan originations, of course, should go up. And 9.9 billion is almost over 10 billion, which is wonderful. Personal loan net charge-off declines. So net charge-off of personal loan is when a person, when a borrower cannot repay his or her loan, and then the charge-off rate will include his or her inability to pay off, right? But now, because SoFi normally does not give out personal loan to anyone with credit score under 740 or 750 even, I believe. So, and SoFi use big data to see the history of loan payment of that individual and also the previous 15-20 years of their credit histories. So the big data really help SoFi to underwrite loans. So their charge-off, of course, is expected to decline and which, in fact, declined in reality, which is great. Total deposit grew 3.4 billion when we add more new members, and also older members have more trust in SoFi and they put more money into their checking and saving accounts. So total deposit grew to 32 billions. But in the whole United States, how much of a total deposit do we have? Let's take a dive. Uh, let's see. 18.5 trillions as of October 2025. So this is very up to date. So far it's just a small fish in a huge pond, right? So can you imagine the future growth of SoFi, right? Okay, 33 billion divided by 18.5 trillion in percentage. Let's see. It just, oh, it's so small that it doesn't even want to give us, oh, 0.0000178. What is the percent? 0.1, let's just say 0.18%. So you can imagine if SoFi can grow 100 times, it is still only 17, no, yeah, 17%. So yeah, there's a lot of growth potential for SoFi. Is crazy. Okay, so let's go back. Where was we? Oops. I should not be jumping around, huh? Was it here? So after the total deposit, we should see the tangible book value grow, which is very healthy, 1.9 billion. to 7.2 billion, which is really good. Wow, more than double over 2 years ago is crazy. Is a fast growth company for sure. Set new record in members and products at a record 905,000 new members and 1.4 million new products. Let's see, let's take a memory picture of these two numbers, 905, 1.4 millions. And compared to mine, which is 915, I have 945, which is good. Next quarter should be very close to 1 billion or even surpass 1 million or even surpass 1 million new members for next quarter. Let's see. And the products, total products, where is it? Oh, members product. It was 1.4 million. See, I was very close. I estimated 1.378 million new products used by members, but actually it was 1.4 million. So I was very close in my estimate. Let's go back. Brand awareness to all-time high. Unaided brand awareness, mouth to mouth, people introduce it to other people, just like me introducing it to my friends, relatives, and co-workers. Reach a record 9.1%, which is great. I remember Tesla in 2014 when I bought Tesla stock. It was 1.7 or 1.8. It was very, very low for Tesla. Yeah. So I was way too early to buy Tesla, but guess what? Enabled me to buy my current house with the down payment. So you want to be early. For SoFi, I believe last year was 7% or 6 point something percent last year. This time, when I bought SoFi, maybe around Q2, yeah, last year. So it was about 6% or even under. Yeah, I don't remember actually. I have to look again. Right now it's 9.1%, which means inflection point is coming. Wherever a company such as Tesla, 2016, 2017, Tesla was about this. And then the rest was history. It's shot up. It's shot up. Just like Amazon in 2008. It was also about this number, 2008, and it shot up afterward. Just non-stop. Kept on going up. So SoFi is at the same inflection point. My English is not that good. Sorry about that. Reflecting SoFi's strength as a trust brand name. So it should continue to go higher in popularity. This is expired is cross-selling. Cross-buy increases for the fourth consecutive quarter, which is a cross-buy. Cross-buy is a member, already a SoFi member, who already might have one or two products that he or she is using. For example, he has checking saving accounts and he has a personal loan, and now he wants to book for his upcoming vacation during Christmas time. So then that booking via SoFi for his vacation is another product that he uses for SoFi products. So that is cross-selling. Wherever someone already is a member, already is or are using one or two products of SoFi, it doesn't cost anything to have that person buy additional products, because he or she just need to browse through the app, browse through the website, and see what he or she can do more regarding SoFi, his or her SoFi accounts. So in that sense, it costs nothing to SoFi to sell one extra products to the existing members, which is what cross-buy means. And further expanded the loan platform business, LPB. Loan platform business is crazy. It's Galileo. That is a tech company which SoFi Technologies acquired in 2021. Since then, they have been moving debit cards, credit cards, loan payment underwriting to that platform and integrated vertically. So the loan platform business has increased, which is wonderful. Wow, it's a record 3.4 billion per quarter. Wow, that is crazy. Almost a billion more compared to Q2 alone. Can you imagine? Then what about the previous quarters? Oh my god. just one quarter alone at almost 1 billion. So last quarter was 1.4 something 2.4 something billion last quarter, and now it's 3.4 billion already. Wow, it's a record, my gosh. Developed new crypto and AI related products. Yes, SoFi will be introducing crypto back to its businesses um, because of the acquiring the bank charter in 2022. During the Biden administrations, the administration was against the idea of cryptocurrency as a mainstream currency. So they require all banks with bank charters in the United States to not have crypto services or crypto trading activities under their banking charters. So SoFi was forced to stop that offering. And now it's coming back because the current administration believe in crypto, and they are actually giving a lot of tailwind for any financial institutions who are inclined to bring crypto trading and crypto activity to their offerings. Okay, continuous innovation in invest. I launched level 1 options and the SoFi agentic AI ETF, which is huge. A lot of people love ETF. A lot of them are people who are too busy to find individual investments ideas. So they really love those ETF. And level 1 options, a lot of people use in Robinhood apps. And since Robinhood apps has have its fair share of issues currently, people wait for a couple of minutes before the trade get executed, and there were a couple of days where people couldn't have access to their Robinhood accounts. So SoFi will be in direct competition with Robinhood, just as Bank of America in direct competition with Wells Fargo for the past, many decades. So um, they're in the same category, so it's natural they compete with each other in some regard. SoFi is a strong and trusted brand. We talked about that earlier. We can save some time here. One-stop shop for digital financial services. SoFi Digital First platform helps members realize their ambitions. It's kind of like the digital first Amazon approach. It's the same. So you have Prime membership of Amazon, you have Plus membership of SoFi, you have digitalizations of the and vertical integrations of logistics, warehousing, website traffic, all those. And SoFi is doing also vertical integrations for loan platform, credit card, debit card, SoFi Money, SoFi at Work, all those, and SoFi Travel. And then you also have the crypto and yeah, all other different investing um, ideas. And also now they have member, right? They have banking, they have credit card, they have invest, they have loans, they have debit card, they have other stuff too, travel and stuff. So yeah, it's one-stop shop, just like Amazon, one-stop shop. You don't have to go anywhere else, basically. Um, oh, and then let's talk about the other thing that SoFi is kind of like Amazon is because Amazon has the AWS cloud services, right, for other smaller shops and other clients, big clients. So SoFi also has their online AI enabled cloud platform for other financial institutions. So in a sense, SoFi and Amazon are really kind of the same, even though they cater to different categories. Um, but eventually, whoever has missed Amazon should consider investing in SoFi. Now, not financial advice. Everybody should perform their own due diligence. In short, DD, double Ds. So you take responsibility of what you buy and what you do not buy. If you regret one day about not having bought a single share of SoFi, then it's not my problem. If you one day you invest thousands of shares of SoFi and you become millionaires, you don't have to thank me. It is your decision to do it. I'm just here to help people to understand more about what SoFi technology is, and it is not just a bank. This is, what I love to do, just to let people know SoFi, what really SoFi is about. Okay, financial service productivity loop. This is what CEO Anthony Noto has always said during his interview with various channels such as CNBC's. They have home loans, they have SoFi Money, they have SoFi Invest, they have SoFi Credit Card, they have SoFi Protect, SoFi Relay, SoFi It Works, loan platform business, SoFi personal loans, student loans, home loans, member one-stop shop. The more they are involved in one single product, such as SoFi Money, which is personal checking and saving accounts, then they may be like me, want to invest via SoFi app. Then you are using one more product, SoFi Invest. And SoFi Invest in itself have several different products. They have ETF, agentic AI ETF. They have IPO investing. They have crypto investing. They can allow members to invest in privately owned companies um, such as SpaceX, and OpenAI, for example. And then so they have SoFi credit card, debit card. SoFi protects your money. They use AI. SoFi Relay, they um, inter inter remittance between institutions and all other um, activities. SoFi at work, the employment benefits accounts, especially after they have the new partnership with Paycheck, Paychex. That company enables SoFi to have access to millions, hundreds of millions Paycheck members information, and some of those Paycheck members can become SoFi members too. So it accelerates, the membership growth of SoFi actually. Loan platform business is amazing. It's gonna help a lot of other financial institutions to underwrite loan and then sell them all those loans that SoFi currently has. Personal loans is bread and butter of SoFi business right from the beginning. I remember reading the bibliography of SoFi. It started with the name So Finance. It was 2012, and founded by 4 alumni of Stanford University. And we can take a look at the history of SoFi in another video, because that will definitely take much time. Tremendous opportunity with oriented generations, which comprise half of the American population. Wow, half of the American populations are using digital oriented financing channels already, or finance channels. Brand awareness, bring new members into the financial service productivity loop. You can read through this, strong cross sell, and yeah. And okay, let's take a look at membership growth, the leading indicator of future profitability of SoFi. Why? The more the member, the more people will be using products of SoFi, right? Strong member and product growth demonstrate the power of innovation and brand building. So the growth rate is 50%. Holy. Product growth is 52%. Wow. All right. So year over year, okay, annualized growth, which is huge. That is matching Robinhood actually. And Robinhood 1 year ago was about $28 to $31 per share. And 1 year after last year, SoFi is in the same per share price, about 28, 30, 31, 32. Can you imagine 1 year from now where SoFi will be if we just take a page of Robinhood? Robinhood now is almost $150 per share. I'm not saying, I'm not suggesting, and I'm not implying that SoFi will be $150 per share in the future in 1 year from today. I'm not saying that. If you are purchasing the shares of SoFi based on what I say, then I discourage you to do that. I'm not a financial advisor. Let me say that again. So, but in all regard, I believe SoFi is still trending up healthily. Adjusted net revenue OMG guidance is 3.54 million for this year, which seems not difficult to achieve. Actually, we may even surpass it. But this one should be higher than this one. If we see that this one is higher than this one is higher than this. So yeah, so I don't see any reason why we cannot at least meet the guidance. I think we should beat the guidance actually. Crazy 38% year over year growth, crazy margin, crazy adjusted net income. This business is just ramping and ramping with with new higher membership, we should expect much higher revenue in the future when the cross sell and also the 10 or 11 big institutional clients of SoFi will start to contribute to their top and bottom line starting Q1 2026. Oh my goodness, next year SoFi is going to be doing even much greater. That is the expectation. And then adjusted revenue, fee-based revenue mix, which is crazy. If you look at fee-based revenue, it's keep on ramping. It's keep on getting a bigger share of the total revenue of SoFi. Fee-based is great because it's almost zero risk. You get a fee just like how MasterCard get a fee whenever a bank or a company such as Old Navy, um, get a new person to start a Old Navy credit card, then they get a fee. So yeah, it's just no risk at all. Okay, just the EBITDA margin, we talk about that, and it keep on ramping. Oh, the trends are our friend. My God, trends are our friends. Okay, rule of 40, which we have talked about for high tech company, especially. Um, Venture capital firms would not invest in those companies if they do not at least meet or beat the 40, which is EBITDA growth plus um, growth of revenue. Okay, so SoFi consistently exceeds the root of 40 and now is 67 as we just discussed earlier. Each quarter since becoming a public company with an average score of 58, actually much higher than the 40. Consistent performance through a variety of macro environments. Remember in 2022 and 23, there was high interest, high inflation, and with a shaky stock market, and SoFi continue to ramp. Demonstrate ability to drive high quality, profitable growth. Combination of growth and profitability profile exceeds that of legacy financial institutions and puts SoFi in verified air among financial technology and technology companies more broadly. So we should regard SoFi as a great tech company. We just have its focus on finance. Adjusted earning per share is gonna ramp crazily, and 37 cents. I think they can even beat that, at least 38 to 40 cents, or even 42 cents actually. Tangible book value. Oh my gosh, it's just crazy. Yeah, yeah. I don't see going forward for the next couple of years at least, that SoFi will be slowing. As a matter of fact, the inflection points had just been reached, and we should see continued growth, very strong growth, at least the foreseeable future, till at least 2030 at least. My gosh, it's like looking at Shopify when it was $50 per share, and then it just shot up to $1,600 per share. It's crazy, Shopify. I first saw the IPO at $20 per share, and it shot up to $1,600 per share plus in 5.5 years. Shopify, fast growth company. Robinhood, fast growth company. Palantir, fast growth company. AppLovin, fast growth company. IREN, fast growth company. Um, Applied Digital, fast growth company. AMD, Advanced Micro Devices, fast growth company. SoFi Technologies, SOFI, fast growth company. These are all amazing companies. Um, yeah, so revenue continued to ramp, revenue, margin, profit. Yeah, what is not to like about SoFi? Every single category is ramping. Can you imagine in 2026 when they will have their 10 or 11 new institutional clients um, contributing to SoFi's top and bottom lines? Oh man, it just keep on growing and growing. Oh my gosh. Personal loans? Wow. We executed 4.6 billion of personal students and home loan sales. Wow. Consistent execution above the fair value marks of loans, which is wonderful. This is what the banking industry has, but they are much higher. Uh, Third, securitizations of SoFi's consumer loan program for collateral originated in the loan platform business Q3 2025. Adjusted net revenue, contribution margin, and profit. Wow, 54%. Uh, let's see. Non-interest income generated through loans originations. Those are the blue ones, light blue ones. Sales and securitization. Securitization, which includes origination fees and servicing. Net interest income generated through holding loans on the balance sheet. So these are from the balance sheet of SoFi. Personal loans, student loans, home loans breakdown. Home loans should be ramping, okay? With the current trend of home loans, more home buying activities are expected by the home association, and yeah. So I think this should even ramp much higher than 945 millions. I think next quarter will be at least 1.2 billions to 1.4 billions. And yeah, and student loans. About student loans, remember the current administration wants to get rid of student loans from their government account. So they probably will be selling a big portion, a big chunk. Oh, sorry guys. As I was filming, the battery was dead. So I just came back from the Apple store, and now let's continue with the rest of the video. So talk about student loans. We were talking about student loans and then home loans. The current government may be selling a chunk of their student loans portfolio, which will benefit SoFi as SoFi buy out those student loans. Those students will also become SoFi members, and also they can use refinancing via SoFi Technologies and enjoy a much better rate with better deals, of course. Then hopefully that will come into fruition, and let's see. And let's look at some other things. There are a lot of things that this Q3 report talk about, and we are not going to go through everything because right now I have lost another 5 hours already. I just came back home. Okay, so net revenue, this was Q3. Contributing profit margin 28%. We look at it early. Oh, one thing about the segments, different segments of SoFi Technologies, only the technology platform accounts are not doing as well as we would like. However, there will be new 10 big clients for SoFi Technologies for its technology platform. So I expect starting Q1 of 2026, these tech platform accounts should be trending up very nicely. And this is about the capital that SoFi currently has. The minimum requirement for banks are 7%, Tier 1 8.5%, and risk-based capital 10.5%, Tier 1 leverage capital 4%. As we can see, SoFi actually, after the last capital raise, they look fantastic. SoFi will ace any stress test if there is one. And if there is a recession coming, we can actually imagine or expect SoFi to outperform even in a recessionary environment. Let's see. SoFi just raised 2025 guidance. Their previous guidance was just 30% year-over-year growth to 3.375 billions. But up to this current Q3 results, the management actually raised the guidance to 3.54 billions, which is equal to 36% year-over-year growth, which is fantastic. And adjusted EBITDA margin, margin will be 29%, which is even great. Also, net income guidance raised from 370 million to 455 millions. So after last quarter, The management guide for 31 cents per share net income, net diluted income for this current year 2025. But now after this great Q3 result, it is going up by 6 cents per share, as you can see, 37. Which, by the way, since every quarter the management give us an update and raise the guidance every single quarter. Since the quarter that I first start to take a look at, which was Q2 of 2024. So I believe this one will be beaten again. Maybe it will eventually, the actual EPS, most likely I would guess at least 38 cents. And there is a high chance of 39 cents. And then there is a pretty good chance for 40 cents. And as high as 42 cents for the whole year is possible, actually, the way SoFi execute everything. What if the membership growth is so solid that SoFi determined not to use $300 for each new member, maybe just 200, or maybe just $150, and then less percentage of discount for some perks, as membership growth continue to be very strong. Then if they use less amount of capital to attract new member or for their daily operation, it is highly likely SoFi can see really 40 cents or even 42 cents per diluted EPS for this whole year. Tangible book value growth is crazy. Prior guidance was 640 million, right now is 2.5 billion. This is a huge book value growth. That is crazy. In the banking industry or any financial institution, you have such a high growth rate for the book value. This is how efficient the company is to allocate their capital. Okay, so this one talk about members growth. We talked about it before, and so 905 million new members growth. Product usage. New product is 1.4 billion, which is amazing. That is almost 1.5 something products per member, which is amazing. Yeah. And the management have said that they expect these products per member will increase to 2.5 or even 3 in the next couple of years, as more members feel comfortable using different products and new products of SoFi Technologies, such as crypto trading, such as level 1 option trading, etc. So lending products is amazing. Year-over-year growth is 30%. Financial service products is also strong, 37%. Student loan originations, personal loan originations, home loan originations. Home loan originations is crazy. Double. See, double. 1.8 billion. But then we don't know 25 yet. And I expect to be at least another double. Okay. Yeah, because the housing market has seen some very good momentum as of late. With current rates coming down, there are more potential home buyers going to look for their new homes. Let's see. Yeah, we will go through more in future videos. Otherwise, it'll be too long. Yeah, everything looks good. Fair values of loans. Delinquency rate, actually, they have been trending down, as we have talked about earlier. 2.8%. Yeah, it trended down already. It's still trending down. It indicates how good SoFi is in their underwriting capability. And then they target members with very high FICO scores and very high annual income. Yeah, their members on average have higher than $150,000 per annual income and FICO score of at least 740. So let's see. Yeah, we're not gonna go into every single bit of details. Yeah, this will take another 1 hour. Okay, guys. Let's get a closing statement. Oh, I saw something. Yeah, this is the let's charge off. See, the credit uh, profile of SoFi members are very good. It trend down, see? The charge off is trending down quarter over quarter from Q2 24 to now Q3 25. Continue to come down, which is crazy. This one is the student loan net charge off. Why Q2 see higher? As you can see the footnote here, student loan net charge off in Q2 included the discrete impacts from switching loan servicers. That's why. Because some new loan servicer want SoFi to, hey, you know what, in order for us to service your loan, I need you to charge off this extra amount in order to feel comfortable to service, or yeah, some agreement that they have. Okay, weighted average income. See, that's what I said. Personal loans, persons who have loans from SoFi Technologies, the average income need to be at least 157K. See, that's what I said. And then student loans also. The students, some of the students refinance their loans, they have income north of 157K. And look at the FICO scores. I said 740, and actually it's much higher. It's 745 for personal loans and 773 for student loans. As students, they are new to the society, so they still are paying back their student loans, but they have even higher FICO scores, as they probably do not have that many credit cards, so their scores could be higher. Yeah, this is amazing. SoFi is aiming or targeting at the affluent segments of the market. Everything is trending up. I cannot wait to see what Q4 of 2025 can bring. Everyone, have a wonderful evening. Thank you for tuning in. So guys, sorry about that. Earlier, while filming this video, in the middle of it, the battery became dead. So I rushed to Apple Store and had it fixed. So after 4.5 hours, I came home, and now I continue. And after this, I still have to edit it. Welcome and thank you for coming for the Q3 result of SoFi, which is, to say that it is great is understatement. Have you seen a bank? What analysts have been saying, SoFi is just a bank. Just like how they have been saying, Amazon is just an online bookstore. In 2005, 2000 to 2005, analysts were saying Amazon was just an online bookstore. SoFi Technologies, 2021 to 2025, actually 2022 to 2025, analysts been saying SoFi is just an online bank. Even as an online bank, look at their charge-off rate. It will just make all the other traditional bank go home. Okay, anyway, so I don't know why the analysts have such negative rating or biased against towards SoFi Technologies. Maybe they were afraid that their banks will be eventually disrupted by SoFi Technologies. When we look at the rule of 40 of these great growing software companies, did SoFi achieve that? Yes, and not just achieving the rule of 40. SoFi actually achieved the rule of 60. SoFi is growing at 67% EBITDA plus revenue growth. So, to view SoFi as a traditional bank, is it for someone who is deeply rooted in the old industry style of doing things? The pre-internet era, the pre-AI era. SoFi Technologies is an AI-driven software platform with big data analytical abilities. This is a huge tech company. It is a technology company which happen to focus on personal finance, everything finance and banking. And in doing so, they need to acquire a bank charter And in the future, it will continue to disrupt the entire banking and finance industry the same way Amazon had disrupted commerce, e-commerce, logistics by using AI, software, big data analytics. To all those analysts, if you don't have any reliable thing to say, if you only look at your old banking industry and use the same old business model on SoFi Technologies, are you doing a disservice to investors? To all those analysts, we retail analysts challenge you guys to do better. Thank you for watching. Have a wonderful, wonderful night. Oh, by the way, before I go, previously I had SoFi Technologies end of year rating at $25 per share. And then later on, after Q2, I raised it to $34 per share. And now after Q3, I am raising it to $38 per share. Okay, and then by June 2026, I'm raising it from $45 per share to $60 per share based on this exceptional solid growth, both bottom and top line, plus the future tech platform growth as well going forward. Thank you. Love you all, guys. It has been an amazing journey, and I believe it will continue to be just the same amazing, fantastic, phenomenal, one heck of a kind, unimaginable